Tuesday, September 10th, market analysis, Stan Ehrlich, about 10:10 California time. I start out with stock market indexes and go to futures, sometimes cycles, sometimes crypto, sectors, forex. So here we go. Stock market indexes and then futures. So the E-mini has topped out with a possible double top. I think it's going to go down into the October lows. And I am very, very stressing the October lows because since 1993, when I think the S&P started trading, it's only failed 3, maybe 4 times, which is 90% plus of the time that it has had a buying opportunity of some significance in October. Some of the lows in October are not particularly a big low, a big rally lasting very long, etc. But some of the October lows, like you see right here, October 27th, I believe, that's exactly right, just last year, has produced this move. Now, we're topping out. I think we're coming down to the lows we made around August 8th and August 9th, early August. And that goes for the lows of early August in pretty much all of the indexes. And I think we're going to get there. But I think we're going to get there too quickly. I think we're going to get there still in September. And I think we're going to break those lows, in which case we have double top formations in play. And we're going to go down to significantly lower levels in October. 45.50 is what I've got for the downside objective. If the double bottom the double top takes hold. That means you got to start closing below 51.77-ish or whatever the low was on this day. And the low on that day was 51.82 exactly. Next chart's the detail. Nice rally, getting overbought on a 1 minute, very much so. Probably going to stop shortly and turn back down. Momentarily, we've got the E-mini down only 2 points, not very much at all. Pretty much almost unchanged. Now, the spider, 80 cents lower momentarily, a little late. We're still short. We're not out. We have a trailing stop that just barely got missed, it looks like. And the current trade is still good. Here's our green trade line from the entry of the trade right there, and the trailing stop right there. So we're close to getting out, but not yet. I'm looking for new lows, whether we're out or not, my opinion. Looking for a test of the lows again, early August. And frankly, I think there's a very good chance again, 45.40, 45.50 on the downside for the SPY. That is actually 455 approximately for the October lows. And you got the 2-minute chart on the spider bouncing back up a little bit, and the trailing stop in very detailed version. This stop moves minute by minute if it needs to. And when a market goes down and we're making a lot of money real quick, that's why the stop moves very, very fast, as it should. Quicker than you can do it and quicker than I can do it. And it's all automatic. Next chart, QQQ. Got the top of the market to the exact day on August 22nd. Got a nice little minor high on that day, June 20. Got a very nice little minor high on May 23. Unfortunately, no buy signals in here recently, but I'm expecting this to come down to challenge the lows we've seen and get down to 223. And that, if it happens relatively quickly in the next week or two, and I think it's quite plausible, we're going to see lower lows after that, quite a bit. But bottoming out in October, next month. So that's only as little as 3 weeks away to as much as 7 weeks away. QQQ, short-term 5-minute chart. I don't see anything except the usual bouncing around here and this bear swing down. And today's rally high earlier is pretty much right where I would have expected something to turn around. Next chart, NASDAQ. NQ. What can I say? All of these charts have approximately the same picture. Looking for the lows in early August to be tested. Don't think they're going to hold, and it's going to go down a chunk more than that into October. Okay, NASDAQ. What is this? 5 minute chart. Still on a little rally momentarily, but I don't trust it. Maybe it's going to get up to 18,847. It already came close. And this is the YM. We have a top that we caught April 1st, a top to the high day, May 20th, a top that we have to the day, July 18th, a bottom. And these are all this year, April 19th, 24. Great buy. And recently, August 8th, like the other indexes, a bullish turn with a signal, and a couple of days later, another buy signal. We've had some whopping great signals for the YM so far this year since March. Let me look before March. Not too much. January 31st, a very poor signal. Small chance it made some money, but probably not. That wasn't too bad, but that was January 2nd, still this year, and it went down some couple of weeks. Now, that was the previous year. Just curious here, real quick. Can't remember all of these. At the bottom of the market, October 22, great. Bottom of the market, but no signal, October 27th last year. One earlier, but that really doesn't count. Okay, enough of that. Sorry. I digress. Short-term chart, rallying, looking like it's going to make new lows very soon. I'm going to start flying by these things a little quicker. Russell did make new low, but oversold. Time for a little bounce. Not behaving exactly the same way as the spiders, Dow Joneses, and the NASDAQs. Next, Russell, short-term data, new lows. Could bounce a little, should. Bond market. We're going to go bonds, notes, crude, natural gas, unleaded, and silver, gold, silver, platinum, copper, beans, oil, meal, corn, wheat, cattle, hogs. Bonds, I think, are going to go down into my green circle during October on a big downside correction. You can't prove it by looking at it right now because we're pretty much high and last, but I think this could turn into a double top. I thought it was doing that on Friday, but today's high is just a little bit above Friday's high, only a matter of ticks. So we're right at the right price. Timing is okay, but there's no real timing per se on a double top. It's topping out at whenever it double tops out at. And the important thing is it's real close to the previous high. So we just have to have it swing down. I like the fact that we're overbought. I don't like the fact that it's trading above a bear trend line and staying there for the moment. 10-year notes, very similar statement. Against resistance, overbought at a previous high, expecting it to come down during October, bottom out, and in this circle. Gold, crude, crude energies, oversold, exhaustion weakness, should turn around real soon. Definitely this week, in my opinion. I keep saying that because some people think that, what I say comes true right away, and that's sure as hell not right. It's an opinion. So, looks like it's going to turn real soon, maybe a little lower, but in this time frame, and maybe just a little lower. Today's low could already be it. I can't tell. Natural gas, bullish engulfing today, looking like a nice bullish engulfing, and it would be green again if I had gotten oversold within the allotted look back period, but we didn't. Here we did, and we got the bottom of this market on a double bottom in natural gas. So far, so good. The little blue marker on the body of the candlestick is the current tick, as well as being able to look here at the price range on the far right. But since I've changed the color of the bodies, I need a little blue marker to tell me which one, the higher or the lower the body, is the close. The rest of it's obvious default. That has to be the open. That, because the blue marker is the close. So anyway, not closed yet. Bullish engulfing, starting to move up, expecting a new high this week probably. Looking for a challenge of 2.46. Break it, you're going to go up to 2.87, in my opinion. Next chart, heating oil, oversold, exhaustion weakness, almost low and last. And by the way, just because markets are collapsing like this and close on their lows on the way down does not mean they're going to go a lot lower and crash even faster. Now, although that can come true, and that's where the tricky part comes in, this circumstance, what you're looking at right now, could be the exhaustion weakness phase. And as George Lane, Mr. Stochastic, and Larry Wells Wilder, Mr. RSI, and I'm sure Larry Williams, my old friend, would agree that this is a setup for what looks bad, and a lot of people get out of longs because they can't stand the pain anymore, as well as a lot of people get fooled into going short because they think it's going to continue collapsing. This could be a point where all of a sudden it opens higher tomorrow morning and you see yourself rallying a lot immediately. We'll see if that happens. Next, gold. Sell signal almost on the exact high day. Little rally at the moment, not changing my opinion, looking for a test of recent lows, and then a move down to 2402, and in fact, down to 2351. But that could be the beginning of another big swing down to 2177. Basically, looking at gold as topping out. Silver's done that with a head and shoulder top and a rare, very rare. I've been drawing and plotting head and shoulder patterns by hand on paper charts since the 1973, 72, 71. Next came computers in the late 70s, Apple IIe, Apple II Plus, and they started drawing this stuff for you with a dot matrix printer. Zit, 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 zit back and forth. Only us old guys remember those printers. Okay, so support being held, bouncing a little. Don't think it's going to go far on the upside. Probably already established a minor high a couple of days ago. Looking for the lows in the last few days to get broken on a closing basis and looking for the market to go down and break 27. Then it's supposed to go down to 24.5, 24.5. Platinum, same story almost completely. Head and shoulder top, small head and shoulder as the head, shoulder of the bigger head and shoulder top. Very rare to see a pattern inside a pattern, in particular, such complex patterns as head and shoulders, which is probably the most complex pattern. A lot of parts to it. And frankly, also very reliable historically. A lot of things that you can predict with this pattern. And I've done so since it caught my attention, which is more likely than not on July 17th. Go back to my YouTubes on July 17th. See if I was talking about a head and shoulder and a head and shoulder back then. Probably started to. If not, definitely on July 18th. So, bearish, looking for a move ultimately down to 809 or more. High grade copper, recent buy signal, not doing great. Not sure whether this double bottom I think formed is going to work or not. Need to see some strength here. Need to see some closing above 418 or so. Challenge 4.2032. And if that's broken, we're going to go up probably to 4.6. On the other side of the coin, if this support area is not going to hold, this buy signal will fail. And we're going to see a move down that's pretty damn substantial, probably at least to 3.7 or maybe even lower. Next, got a buy signal very close to the bottom in soybeans. But we recently had a sell signal, which is working. We are almost stopped out of the long position. Just because we get a sell signal does not mean we abandon a previous position on the long side. We need to get stopped out of it to go flat before we go short. Some sell signals don't last long and don't go low enough to stop us out. And if we had reversed, we would have taken profits too quickly and we would have gone short for a very small move down that may not have led to a profit. So that's why we wait until we're flat before we get into a new signal. Opinion, my personal opinion, that's a minor high, bear trend in effect, close to resistance, probably going to stop us out with a profit and start to head to new low ground completely. Soybean oil, basically the same comment. Got a good buy signal, past tense made some money, tested resistance, got overbought. Don't like this on an intermediate to longer term basis. Looks very bearish. Short term, there's a chance it could bounce, but I frankly think that's over and did it already. And now it's going to head towards support and the lows and maybe break them and keep on going down. Basically bearish short term, intermediate, and long term. Soybean meal, same thing. Resistance touched, breaking minor new lows last couple of days, got overbought. I think he could make new lows in the support area, break it, and keep on going down. Next, corn. These buy signals didn't work very well or at all. Nothing on the bottom, and it's too bad because if we had made one tick lower low on August 27th, we would have a bearish engulfing and probably would have gotten oversold, considering that is ticks from getting oversold. And this is my custom relative strength in the subgraph. And I learned RSI from Wells Wilder himself and stochastics from George. George Lane and I became pretty good friends over the years, decades. Next, we've got wheat. Had a good trade, lasted 2 days, up against resistance. I'm sorry, the same thing has to be said in grains overall. Bearish, intermediate, longer term. Sometimes I'm getting buy signals I can trust. The last one was August 27th at the bottom of the wheat market. Perfect turn, but bear trend, nothing to support any longer term bullish commentary. So I don't trust it. New lows maybe in a week or 2 or 3, but this could be the high of the rally. And it's just going to dribble on down, kind of like it did from August 6th through, late August. Cattle, double bottom possibility. Sorry. Need to see it start to rally more than this. Trend is down last couple of months. Lower lows, lower highs. Resistance has stopped rallies. Trend lines that are appropriate stopped rallies. I don't think the double bottom is going to work. I see these formations well before most people do. And therefore, if I point them out, I have to make sure you understand that they're really not formed yet, finished. And by the time they are, you've probably missed a lot of the moves. So I make mention of it in the early stages, JIC. By the way, that's a very, very helpful order, JIC orders. That's a joke. There's no such thing. It means just in case. And that should be your protective stops, always, just in case. Next chart. Miss Piggy's hidden south, getting close to oversold, not quite, in a support area, could bounce any old time. Trend is kind of ambiguous. Last couple of months, definitely up. Last 6 months, I don't know, maybe down, but neutral. And last, I don't know, close to a year, big sideways trading range. So long term, very iffy. Short term friendly, but you're in support, could rally a little. Don't have anything great to say about Miss Piggy at the moment. Back to the E-mini. Rally has been pretty good. Now we're slightly higher on the day, or almost exactly unchanged. Have a great day. Profitable trading to you.